Hello, fellow traders. 'Tis I, the Rumpled One. Friday, September the 7th, the year 2018. Let's talk trading. NFP day, non-farm payroll of all days. This is the day where you better be on your money and risk management game. So let's just dive down here, look at the charts. And we can look and see what happened when the NFP came out. So let's see, I'm at 8 o'clock, 7 o'clock, 6 o'clock, 5 o'clock, which is 8 o'clock New York time. So we should probably drop down to the 30-minute time frame. So we can see what happened with NFP. So 1530, that's when the NFP came out, and you can see, boom, and you can see what happened next, a nice recovery. And even though we're on M30, right here, you can see price left that wick zone. Left it to the south, it went up, left it there, and then what happened? Price left this wick zone and never looked back. So you can trade these different methods on the various time frames because they work. You see, you should be able to trade across. So using the wick zone, even on an M30, shows there's money to be made. And what did we have here? Red followed by green, continuation, turn trade at the bottom. You see this? You scrunch it in, turn trade at the bottom, turn trade at the bottom. This is not difficult. You know, everybody's saying, ooh, scary NFP. No, I like the volatility. So we can go back here. Look at the monthly. Look at this. Entered the body. Now it's in the wick zone. Which way is it going to go? Okay, lower wick zone of the previous month. Let's look at the week. Oh, lower wick zone of the previous week here. It's Friday. It had shot out. Both this end shot out of that lower wick zone. Money to be made. And those of you who are tuning in just now, all the gaps filled for the week. I hope you're just not tuning in now. Hope you're with me all week. And the daily, you see here, we broke through the previous day's low. Good for about, 28 pips or so right there. 27, 28 pips. Okay, and then we broke here out of the previous day's lower wick zone. That would have been good for about 38 pips. And once again, the beast is lacking. We've got the pound New Zealand and pound Australian taking the lead over 200 pips. 1, 2, 3, 4, 5, 6, 7, 8 over 100, with 2 of those being over 200 pips. Dollar yen 86, euro yen 88. I'll let you guys in on a secret. I'm still trading dollar yen also. But we're going to be looking at the euro yen. I don't think this is going to drop below this one. It could, but not on a frequent basis. And I'll have to pull up some frequency distribution since we changed pairs, so I can give everybody, old comers and newcomers, an idea how I analyze these pairs for trading. And we've already looked at the buy zone here, but you can see winner, winner. This one here, shot up here. Maybe you took that loss, or maybe you scratched that trade because it didn't maintain the weekly open. And here you could have made it all back and then some. Once again, you see here, it's struggling. It broke out, but came back down right here at this level. It's like, no, see, it failed to make a new high from there, and it's crossing back into this wick zone. And you scratch that trade. It's kind of like in poker. You get dealt, sometimes you just throw the cards in. You just scratch it. It's not playable. You have to be able to do that. There's a nice green rat zone trade happened there a little while ago. Nice red rat trade, gave you a second opportunity. It took out the pivot right here. And you can see right there, it took out that pivot. It's at a doji right now. And you can see this, we still have this missed pivot. Price action. Oh, this is the, see, I was still looking at the dollar yen. I had a trade going there. We'll go back to euro yen. Price action, 3 ball at the bottom, green at the line. Profitable trade. 2 ball at the top, red at the line, and profitable trade. 1 ball at the bottom, green at the line, profitable trade. It should be obvious to those that this happens on a frequent enough, regular recurring basis that you too can be profitable just trading simple horizontal lines. Even on NFP day, you can see here, green at the line, money to be made, red at the line. Right now, Randy real time. And you can see here, we are in the lower wick zone. So it either wants to go out the top or out the bottom, right? And we look at here, we got a holo trade that's sitting right here, right around the previous day's midpoint. But there's the highest open. Here's the lowest open. You see it dip back in, giving you a second chance. Now, just to be clear, this candle was red when it was right here. So you're taking a chance. You're saying, okay, if it comes out of this zone, I'll put my stop loss just right below here. So you had about a 17, call it 18 pip stop loss. So you have your position size accordingly. You don't know what's going to happen next. It paid off. But that's how you do that. When you see it dipping in fact, this indicator will tell you, like if you want to do the max trade or not, what your position size should be. Inventory reduction bars. Okay, we had a short here. Then there was a long, but that, once again, you can see just based on the wicks, it's telling you scratch. A long here. It came back down. You should have taken your money off the trade. When the long here, when it came back down to here, take the money off. Like I said, this is only a handful of pips, but if you do it often enough, they add up to a bucket of pips or a dump truck load of pips or a boatload worth of pips, right? Okay, previous daily, weekly, monthly, open, high, and low. Once again, simple horizontal lines. You know, all traders will agree that this was the weekly low, you know, if we're all on the same platform. This was yesterday's low, and you can see just trading with the candle color at these horizontal lines proves to be profitable. And you can see here we're pretty much horizontal on the tick chart. Not really much price action here at the moment. Just kind of waffling. Einstein line. Once again, we had a short, and then we had price, come down, but then come back up right there at this wick is saying, just take the money. Here you get another opportunity. It's reversing once again, just looking at those wicks. Just take the money. Okay, it's only 3 pips. But price is reversing. Here's the same thing. You got in the trade, it came back down, it went up, failed to keep right there, it came back down. You take the pips. Okay, it's 2 pips. But it's 2 pips in your pocket. But, you can see right here, it's just waffling around this area, ranging. More reason that if you get in the trade, just take the money quick. Don't be greedy, right? So NFP day, I know I used to have the usual screen up, trading off at different levels, but let's see. You can use, basically it's this screen here, and with the euro yen, I believe this was, let's see, this is 8765. So right here, when it shot above here, you go long the line. You shot below here, you take that, and you just take your profit. Then reversing right there. It is so simple. That's how I like to trade NFP, using these 5 lines. Very, very, very simple. You just put in a buy stop, a sell stop, let the market do it. You're there. Once you're in the trade, you just take your profit quickly because you don't know what's going to happen next. And it's just that simple. Some people like to avoid NFP. I like the volatility. So, traders, don't be afraid next month when NFP comes around. You can do it. Because remember, it's not what you trade, it's how you trade it. So I hope you had a good week at draining the banks, and I will see you next week.